Yields on short dated bonds in the Eurozone, which are highly sensitive to interest rates expectations, touched new lows. Germany's two-year yield, fell to a record minus 0.3%. The euro tumbled to a two-week low against the dollar at 1.1152. Expansionary monetary policies typically weaken their currency's value, which basically means the dollar would increase in value versus the euro. The degree of monetary accommodation will need to be re-examined at our December meeting, when the new projections will be available, as Mr. Draghi said there. Draghi said the relevant committee have been tasked with examining options that will be available to policymakers. This is in December. The takeaway is that they will do a bigger package and hope a double whammy of rate cuts and expansion of the EBC purchasing program helps deliver what they need. That's from Richard Barwell, an economist at PBN. There. So Draghi strongly headed additional stimulus on the goes the fragile state of the global economy and continued reliance on super easy monetary policies. The Federal Reserve last week decided to keep interest rates near zero despite the U.S. having a faster job-filled recovery than Europe. The Bank of Japan is in the midst of a large asset purchase program, and the Bank of England still has its policy rates at a low accommodation there. And let me see if I can grab a little bit more of this. Some of the colleagues there at the EBC are a little reluctant to expand quantitative easing program soon after its launch, with a number of national central bank heads who sat on the board recently expressing a preference for waiting until the continuing purchase of government bonds has taken full effect. So this will actually continue on. Nothing new there, but the European economies have some problems. There's no doubt about that, and that in itself is one of the things we'll be looking to with much more vigilant as to where the European economies are going. And we were just briefly looking at the journal to see if anything else they had spotlighted here. China. Chinese central bank evidently cut the benchmark 1 year lending deposit rate 0.25 percentage points. We'll get to that when we go to the BBC. Back now to the Reuters news agency. The same thing, basically. The debt ceiling, now that looms. A last-minute deal. Now that'll be the 3rd of November. That will happen. That deadline will occur in a little over a week ahead. That'll be on a Tuesday, November the 3rd. But as far as the Fed is concerned, the Fed will more than likely stay put exactly where they are. Ethan Harris, a global economist with Bank of America Merrill Lynch, said he took a different view to the consensus and felt the Fed might be encouraged to act by Draghi's words. The prospects of more European central bank stimulus might hurt the U.S. economy by pushing up the value of the dollar. We touched upon that, but the effects may be more than offset by other effects of the announcement, as lower U.S. market interest rates, gains in stock prices. The stock market is up, there's no doubt about that. The Bank of Japan is considering an expansion of its stimulus. They are not out of the woods. 6 of 13 economists at the Reuters polled would add stimulus when it meets us Bank of Japan, with inflation forecast to be just 1/10% in fiscal year 2016. So in other words, these economies, Japan particularly, are in a reverse gear, so to speak. They are not really moving off. Very uncertain. They have definitely a very big demand problem going on. And of course the Chinese economy has slowed, and because of that slowing, there are problems. Now, from Reuters here, Chair Yellen will testify Humphrey Hawkins on December the 3rd. That will be obviously after the meeting, and many things will be appropriate at that time as far as what is going on. From Reuters on the Chinese central bank sees very normal growth, 6 to 7% in the next few years. That is from the People's Bank of China, and that was on Friday. Monetary policy easing in the second largest economy of the world, second largest economy, is more aggressive since the crisis, and they're in a 25-year low. Just kind of summarizing things here as to where the Chinese are going with some of their policies. We'll get a little bit more from the BBC on the moves of the People's Central Bank and what they expect, or how they expect, I should say, to move here. And we'll jump back there, but we're going here. Rate cuts, lower bank reserve ratio. And this is from the Business Daily here out of New Zealand. A lot of information there. The Chinese central bank cut its interest rate on Friday for the 6th time in less than 1 year. It is again the lower amount of cash. It lowered the amount of cash that banks hold as reserve to jumpstart growth in its suffering economy. Monetary policies in the world's second largest economy is at its most aggressive since 2008. In other words, the depression. Growth looks set to slip to a 25-year low under 7%. Beijing has promised to deliver for months in theory, allowing banks to price loans according to their risks. And the People's Bank of China, that's known as PBOC, said on its website that the lowering the 1-year benchmark lending rate 25 basis points to 4.35% effective on the 24th. That's today. The 1-year benchmark deposit rate was lowered 25 basis points to 1.50%. The reserve requirement ratio was also cut 50 basis points for all banks, taking the ratio to 17.5% for the biggest lenders, while banks that lend to agricultural firms and small companies receive another 50 basis points reduction there. This is a much more detailed summary of what is happening there. Investors in Europe took cheer and share soared, while the Chinese offshore yuan fell against the U.S. dollar. In the next step, monetary policy will be kept not too loose and not too high. That was from the bank, the People's Bank of China. The easing came after the Premier Lin quote on state radio is saying that China will make reasonable use of rates, and the RRR cut to keep the economy growing at a reasonable pace. And the answer there is obviously at a reasonable pace. We'll go now to the BBC and look to. Wait a second here. We actually do the show live. Well, anyway, we can go to the BBC. That's not a big issue there. And we'll do the numbers. Maureen O'Hara died at 95, incidentally. We won't do the Chinese bank. They cut their interest rate to 4.35. That's a headline at the BBC there. U.S. shares higher on Chinese rate cut. This is as we move back here. The Dow gained 157.54 points, or 0.9%, to 17,646.70. We won't give the NASDAQ because we'll give that later. Shares in Microsoft surged 10% after better than expected results. Google, the owners of Alphabet and Amazon, also rose. The shares in Alphabet, that's Google's new name, rose 7.9% after reaching a record $752.50 in early trading. After the bell closed, it reported a 50% rise in profits to $3.98 billion. Amazon rose 6.2% after it surprised investors with a profit. And a positive result boosted other tech shares. Apple reports earnings next Tuesday. The rate in China also lifted things, as they say, merrily along. And let me see, we pick up, this is, we'll do Amazon here. We've done Google and Amazon there. They have net sales rose 23.2% to $25.36 billion. Shares were up 10%. Worldwide sales in North America rose to 28.3%, or 15.0 are not there. Amazon has piled on revenue growth since it started up, but only recently began booking profits. It's actually 20 years old, out in Seattle. The net sales from Amazon Web Services, which have more than 1 million active customers and 190 customers, rose 78% to $2.009 billion in the 3 months at the end of September. Amazon has made a strong growth forecast, and it's vague as how strong, between 15 and 14% for the holiday season. The online retailer reported 92 million profit for 3 months to June 30th, surprising investors there. So Amazon has been rolling along. Incidentally, much of this information can be found on our Twitter feed, which is E=MC². We've been using that for a very, very long time, and I was going to look at, and I don't see it here, but Microsoft also rose as one of the market rises. The old hat businesses that have been able to move forward as